Hi guys, welcome to the Daily Charts. My name is Michael. I'm the analyst and the content creator here on the channel. Let's discuss the target of a day trader. And of course, every day trader is trading for one purpose, to make money. But what is the ultimate achievement of a day trader? Can you day trade for $1,000 per day, or should you aim at 10% per day, or 20% per day, or 5% per day? And what is 5% out of what? So being that obviously day trading positions vary. If you are trading a US platform, a $20,000 position is not a big deal. If you're trading out of Asia, maybe $5,000 is a big deal. So if on average a US day trader can buy a $20,000 position, it's not a big deal, because you need at least $25,000 times 4 buying power in order to day trade in the US. So a $20,000 position is not a big deal. So can you aspire to trade a $20,000 position and make 10% out of it on a given day? Now let's take a look at the potential of US equity markets. This is the list that I compiled. Hold on a second, not this one. Should be the green list. Okay, this is the list that I compiled using the Moomoo platform, and you can clearly see that on this list I have at least couple of stocks that are winning double-digit intraday. So sorry, not intraday, including the gap. So KSS is up 42%, including the gap. SYM nearly 40%, including the gap. ANF nearly 40% or 38%, and so forth. So basically you can see there's a huge list here. I have a 28 matches here of stocks that basically all of them are anywhere between 8, 9, 10, and sometimes more than 20%. And some of the stocks here, I have 3 stocks that are above 20, nearing 40%. And again, if your target is 10% of your average position every day, which seems reasonable to me, okay, everybody can set up its own target. Clearly you can make 10% in KSS. Maybe you can make 10% in ZIM out of 13%, and maybe you can make out of Zoom, out of 9%, maybe you can make 3% here and 3% on Macy's, and maybe on BWR you can make out of the 8% 2%. So the idea here is that being that you're not limited to one position all day, and you can trade at least 4 positions at the same time, you are not limited or bound to any financial constraints. Okay, so you can buy KSS a $20,000 position in the morning. Let me show you the example. So this is KSS. You can buy the position either in the morning or in the afternoon on this reversal, and you sell at the close of the trading day. So maybe you make on this trade 8%, maybe you can make on this trade 15%. The idea here is that only on one trade you can reach, if it is the right trade, you can reach double-digit returns. Now let's say this position is $20,000. In this case it's 1,000 shares. It's not a big position to trade a 1,000 share position of a $22 stock, which trades 35 million shares throughout the trading day. And again, the idea here and the concept is that you're looking at this target, 10%. Now, is this a reasonable target if you have the ability to make 50%? Let's say you had the ability to make 50% out of a $20,000 position, trading 6, 7, or 8 positions every day. That's 10 grand a day. Sounds unreasonable, doesn't it? Okay, it's not unreasonable. It's very hard to achieve, and you won't be able to achieve it every day. But on a day like yesterday, for example, and I'm gonna go back to the list. So again, looking at the list, look how many opportunities you had here. So let's say 10% here, 5% here, 5% here. then you have trades that will lose money. Okay, we'll talk about it in a bit. And you have on Zoom 3%, and on URBN, Urban Outfitters, 2%, and on Macy's 4%, and on BBWI 4%. And where is another one that I was watching yesterday? Okay, I think I missed it here. RKT. RKT went up nearly 8.5%, and you can make 3% in RKT. So the idea here is that you spread your trades around, not putting your whole eggs in one basket. Okay, so if you can trade 4 or 5 positions at the same time, it doesn't mean that you can manage 4 or 5 positions at the same time, but you do have 6.5 hours. So again, let me show you an example. RKT, for example. Let's say you miss the morning trade in RKT here at 19. Maybe you can take the reversal trade late in the day at 1940 and make here 2%. Okay? Sorry. And again, 2% on one stock, 2% on Macy's, 2% in let's see, for example, Zoom, for example. Hold on a second, guys. The stock trades basically from in the morning from 84 to 91. That's $7. $7, it's 8%. Now, can you take 8% out of this move? No. Can you lose money? Maybe. Okay? But the idea here is that you have the potential, if you screen and basically follow the winners at the beginning. Stop thinking about Google, stop thinking about Nvidia, stop thinking about making 30 cents or $1 per trade. Think about the percentages that you're going to make on your position per trade. And if you think about percentages, the stocks that are likely to move double digit are those that are going to basically outperform the market, and those are the positions that are going to turn your day trading day into a high performance trading day. Now, would you be able to repeat 5 winning trades every day? Of course not. But if you can repeat twice a week 5 winning trades, or even 3 winning trades, and on the losing trades you're going to lose less than 1%, then your risk reward basically is out of the world. You won't be able to trade Nvidia with a 3-to-1 risk reward, or on a normal day, or Google on the 3-to-1 risk reward. But you will be able to trade KSS sometimes on earnings, like yesterday when it's up 40%. We will be able to trade it with a 20-to-1 risk reward. Again, let's go back to KSS and see how. Okay, so again, if I'm trading KSS in the morning, and let's say I'm buying it, again, a bit risky in the morning at 1950. The lows of the day are 1930, okay, or 1925. Now, if you stick to the strategy that we're teaching, and again, you can, or it's your money after all, but once every couple of days you're going to get or hit pay dirt. And pay dirt means a 10% plus intraday move. And this is actually nearly a 20% intraday move, where you buy at 1950 and you end up with 2250 type of a winner. Anyway, guys, the idea here is that if you do your homework, the research in the pre-market, and are yourself and trade the double-digit winners, or basically take the stocks that are, or trade the stocks that are most likely to deliver big moves with very little risk. Some of them will deliver, others won't deliver. Basically, the idea here is that you need to trade as many positions as you can, and if the market will give you the opportunity like it had yesterday, you will be able to trade 2, 3, or 4 positions that are 5% or more of profits intraday, and those add up. And by the end of the month, or by the end of the quarter, if you're going to have 10 positions in 3 months that delivered basically 10% each, 10% each times $20,000 times 10, that's $20,000. That's $20,000 adding to your profits that you never had until you implemented this strategy. Okay, guys, I hope it was clear enough. If not, do use our email or our WhatsApp to get in touch with us. Thanks for watching. I hope it was informative enough, and we'll see you in our next video.